Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 4 o'clock in New York on Thursday, the 22nd day of January 2015, and this is the daily report for gold and silver. Following an announcement by the ECB in terms of the amount of their quantitative easing, which was raised from what was leaked yesterday, we have a substantial rally continuing in the precious metals markets, with gold currently trading up approximately $11 to $12 on the day. 1304.55, that is the print that we are currently looking at. Now the low, 1279.50, the high 1308.40, tremendous range on the day. We'll talk about that in a few moments. Silver also flying high today, 1840, 1841, that is our current print on the screen. It's up about 1.4% on the day, or about 29.30 cents on the day. The low 1783, the high 1856. We'll talk about silver a little bit towards the end of the show. Incredible move in the precious metals markets today. We'll start by looking at our daily chart so we can look at different areas that we believe could offer some support or resistance. Of course, yesterday we did trail our stops up, and in gold we moved it to 1274. I will tell you, with the kind of range we had yesterday, I'm very glad we did not get stopped out. Take a look at this daily chart, and this daily candle. Now, we did have the market go as low as, I believe, 79 or 78, as I just announced as we looked at it. So we certainly didn't get stopped out, but you can see that we had some real volatility. As I was watching the markets trade overseas last night, they were up for a little while, then they were down. They were down for the better part of the beginning of the evening here, but as it began to be daylight in Europe, of course, we saw this market begin to move up. And of course, with the announcement that the quantitative easing that the ECB is going to initiate is approximately 16 billion per month over the next year, we saw these markets fly. We have substantial gains not only in the dollar and the equities markets, but the precious metals, all running in tandem with oil running lower. We'll take a look at those charts in a second. So traders, we are looking at our weekly chart. This is a continuous contract of COMEX gold. And without a doubt, when we look at the longer term aspects of this market at this point, specifically our long-standing resistance line, we can see that that has been taken out, and taken out solidly, as we see the market move to the upside. Which takes us to one of the longer standing charts that I look at, this being a weekly chart, spot market of gold, and we have our major count here, and that's what I wanted to kind of touch base on. We're assuming that we had a major 1, a major 2, of course, a major 3, and the question was, when is this retracement, this major 4th, going to end? Well, the fact that we have now substantially gone above this particular resistance line. I didn't draw it in that straight, but this particular resistance line, look at the dramatic move that we have seen over the last 2 weeks. Roughly $100 move as we've seen this market move from about 1200 to above 1300. That is a large green candle. And what that tells us is that there is a distinct possibility that we are now in a major 5th wave. If that's the case, we're going to have to get out some of those models that we looked at towards the end of the year, the bullish models, because they certainly could be in play. This, of course, is our weekly dollar chart. We are right up at one area that I looked at that could provide some resistance in the market, and that is based upon the one gap that we pointed out yesterday, which is right here. And so my sense was that we're probably going to fill this gap at some point, and now we are just up against it at 94.53. So we certainly have some more room for upside in the dollar. So traders, we're looking at a weekly chart. This is the E-mini Standard & Poor's 500, and you can see how well it has recouped over this last week, finding some support. I believe it was 1985. We'll have to look at our more short-term chart in the S&P to determine that, but you can see we've had a nice move up, currently trading at 2056, the record high right up here, and we are closely approaching that point. So traders, here's where we can really see the kind of momentum that has been reachieved in the Standard & Poor's, meaning Dow Jones Industrial or U.S. equities markets. We identified an area of support technically based at roughly at around 1985. And I say roughly because these two moves down did absolutely come below it, but they were well above the 50%. So that's the closest area that we can find in terms of a technical basis. Market is steamrolling up. Here is our record top up here, roughly at 2090. And as I said, we're currently trading at about 2056. And traders, we see oil back under substantial pressure. Our line in the sand, so to speak, in other words, if we're going to find any kind of support in this market, I believe it's got to be in between these two areas. We are currently trading well below that, back below 47.48. We're at 46.64 per barrel, under pressure again. Now, the one thing about the oil right now is that we are such an oil-based economy, meaning whether it's transportation, whether it's petroleum that's turned into plastics, there's so much use for oil that my sense is these lower oil prices are going to have a tremendous boom to the economy. So traders, obviously, we are positioned just excellently as we are long both gold and silver in the market. For right now, at least, I'm going to keep our stops where they are, but I'm going to tell you what I am thinking. Should we get a continuation, I want to move it right to this point, which is roughly at 1288. That's going to be the next level I want to move our stop, trail our stop up to. I want to see how the market closes and if it can effectively form a base above 1300 per ounce. If it does, I've added another fib retracement. This fib retracement starts up here, roughly at 1390 or 86, excuse me. And when we do that, we do get this one retracement level, 1325, and it kind of lines up not only with this top here, but these levels right in here, although not exact, because we do see that the market did trade above it, but we can see that there was resistance here. We can see that it was resistance here. And so my sense is our real next level of resistance that we do want to look at is roughly 1320, 1319 in that particular area. My recommendation, obviously, maintain our current long positions, maintain our stops. We will look to trail them up later this week or beginning of next week. And so traders, lastly, I do want to take a look at silver. Silver has really been a dynamic move. We've got tremendous profits in this trade right now. I'm currently pegging our support level here at about 1807. That's our 76% retracement level. If we look at these recent lows that came back, June of last year, I'm going to try to kind of move it as straight as I can. It takes us roughly to about 1875. We are at 1832. I am pegging our current resistance in silver right in this area. Again, maintain current long positions, maintain our protective stops. This has been Gary Wagner wishing you, as always, good trading, and we are certainly getting it again this week. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.